Right, so here we go. Now we're going to look at the RSI strategy for Banker EA in terms of finding them entry points that are reversal points in the market. We're going to look at trading RSI now in the normal way. So I've got a gold chart on screen. I've got the RSI indicator on screen just to give you some visual cues over how RSI works and how it can be traded. There are some great videos on YouTube that run through the philosophies from the creator and inventor of the RSI indicator as well. So bear with me on this video. Let me run through some pointers to help you understand how you can use this and deploy this in your own trading as well. First things first, I've got RSI indicator up on screen. There's a few things that you need to understand. So RSI is basically made up of, say, three things: the overbought level, the oversold level, and the period, and also obviously the time frame that you're on. If you're on the 1 minute time frame, there's more action than there is on a 4 hour time frame because of the amount of time within a candle. So I'm just going to show you some things on the 1 minute time frame now that really help you sort of get an idea of how you can backtest Banker EA using a couple of different strategies. So first things first with RSI, let's set some levels on here. So if we set 80 and 20, principles behind trading RSI normally are as soon as we enter these regions here. So this is called an oversold level. This is an area where we're likely to see a pullback in the market. And as you can see here, we did. So at 12.50 here, we entered into that zone. If you were using Banker, you could have set this to have entered a few positions in this downward move and then close in profit on the overall sequence on that pullback. Same for up here, sneaked into this zone, eventually did pull back. It won't pull back straight away, but that's why we have multiple sequences. That's why we also have the ability to delay and simulate trades in that sequence to get a better entry. So for example, on this one, if you were to have a trade delay here, it technically would have entered here, but if you were simulating positions using the trade delay, you could have got a much better entry in this region because that's what it's doing. It's simulating them positions, waiting for it to have got into, in effect, drawdown to then enter. Because ultimately, that's just like trading RSI divergence as well. And that's where RSI might go in an opposite direction to how the pairs move. And you can Google that and look into that yourself. So here as well, we've got above 85 or 80, sorry, and on this spike here would have been a lovely entry to then reverse and close in profit. Now, a few things to consider here. So the inventor of RSI usually used or suggested people use RSI length 14. So that's basically RSI period 14. That's where you count up the data of 14 candles that gives you the visual representation of where these levels are at. So a popular choice is RSI level 60-40 or 70-30 across most time frames in terms of finding them areas of reversal. As you can see, there's quite a few times that price gets into these zones. So that would be quite a busy strategy. If you wanted less trades, you could change that to 85-15. As you can see, you wouldn't really be getting any trades there unless you change the RSI period and brought that down a bit. If you looked at period 5, there's less candles in that calculation. We're going to get into those zones more often. As you can see here, you'd have had a buy. Down here, you'd have had a sell because you're overbought. You'd have had a buy because you're oversold. And you can see how price oscillates through overbought and oversold levels where there are higher areas of probability for reversals in price. So you can see that on this chart. Same here, overbought at this area up here, and then we sell off and we get down to here where it's oversold. Didn't quite react here. It won't always. It won't always. And that's why we have risk management. That's why we have various different ways of simulating delays, etc., etc., etc. Another strategy that the inventor of RSI, and something that I like to do myself as well, is run a really short RSI length of, say, period 2 and run a really high level. I've ran as high as, I think, 96 and 4 before. What this does is give me quite a high trade volume that gets me into these extremes quite often, and it can work quite well. Won't work the same on all pairs, but you can backtest this and have a look at this yourself too. So there's a short video on the principles of RSI. Watch this video of the Banker EA working in visual mode, and you can see how it's trading in line with its settings in RSI too.